Hello, 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 everyone. Happy Turnaround Tuesday. How is everyone doing today? Good morning, Davey. First in, second in, Patrick. Good morning. Again, thank you for being here. All right, there we go. Rams of fall. So, and the magic answer is Paris. Or, sorry, is France. Sorry, is France. So anybody on Reddit or not Reddit, geez, on the Discord server might understand that one. By the way, good morning, George. Boy, my head, woof, can't even remember a song title name. Well, I got the geography right. Yeah. So, what were the three again, Rams of Fall? Let's see. This morning. This morning. By the way, we're talking about Grateful Dead studio songs that were never played live by the original, well, the Dead with Jerry Garcia in it. Good morning, Tim. Welcome, welcome, welcome. Thank you for being here. Hello, Options 22. Now we can get going. The crew is in the house. All right, we had Redbook come out a few minutes ago. Better than previous. Remember, that is based off some retail sales and is not inflation adjusted, but that's still holding up. Even with the inflation, slight inflation pullback, that number is still holding up. S&P, global manufacturing, composite, and services flash numbers. Real key is whether they stay in contraction or expansion, which is the 50 mark. Do I know what the market's going to do off those? No, but they're more minor. And it looks like we're trying to put in at least a temporary turnaround Tuesday bottom. So we could get, especially with cycles to the bottom, but we'll get to that. And then we have 9 a.m., 30 minutes after the open. And remember, I'm on Central Time, everyone. We have new home sales, which is going to be discounted because everybody's already said housing is just going to keep pulling back. Richmond Fed and manufacturing shipments and Fed services index. One, I'm keeping an eye on the Fed services to see if that stays in contraction. And then remember, after the close today, the Fed cash and carry. I know, it's cash and carry, but it's really cash and carry for me. Mix this morning pretty much. Oil, things stronger. Oil's still moving on up as expected. Let's see. Oh, Macy's came out with a beat, but then a guide lower. So there, another guidance lower. We're starting to see more and more of those. But 55% the 75 basis point hike. 45% the 50 basis point hike. Not until September. Bigger news is Friday with Jackson Hole. We still are in negative gamma. And Anissa made a comment on the video last night. I think people still are mixing this up. Negative gamma does not mean downside pressure. Negative gamma means increased volatility. So it can amplify the moves both up and down. Just as positive gamma does not mean it just is going up. It means it's deadening the effect. It's lower volatility. Why? Because the hedgers have to sell into moves and buy into dips. In negative gamma territory, they have to sell into dips, further exaggerating the dip, or buy into rallies, further exaggerating the rally. So if we do get on, I'm not expecting a major momentum day, but anything can happen in these markets, especially where you can trade back into a clear path, as I talked about yesterday. You can get exaggerated moves back to the upside, especially if there's a headline or something that pops the market. Remember, though, neutral gamma roughly around 42.25. So that's the key area you should keep in mind because that's where the flip point is. So make a note for yourself. That's why that's important. Because it's handy to know if moves can get exaggerated or deadened. I talked about Macy's. I did not look at XPeng yet this morning. I'll have to look at that after the open. Today, after the close, I always check out Advanced Auto Parts. That was generally some great trading for the last couple of years. Not so much in the last few months, but the last couple of years, it was fantastic trading. That's really what I'm focused on. So, S&P. Let's see who's else here. Hey, Chris. SP Bill flag? I think you mean bull flag. S&P on the shorter term. This isn't a flag pattern, by the way, if you look at it on the, unless you're talking about very short term, like this little 15-minute. But this little breakdown would have destroyed that little flag pattern. That's no longer a flag pattern, and this definitely isn't a flag pattern. Good morning, Lauren. Hello, Josh. Can we check Zoom? Yeah, just remind me after I get through some stuff. So S&P daily cycles at the bottom. We'll start watching for the turn up. Nearly in oversold condition. So that's what we're looking at right now, trading against that key support 41.24 area. If we do break down again, there's not a super strong bottoming pattern, but I'll show you what I'm watching going in the open. 4,100 to about 4,095 with a potential dip. If we get some kind of dip and then reversal would be the 50. And you have a gap down there, but I'm more so looking at more of a narrow range. If we do dip down that 4,100 to 4,095. Now, what I'm keying off into the open is if we can start, this is my minor level, 41.53. We start getting some key momentum back above there. Then 41.64 is the first target. What I like to do with those two, and I always love to trade multiple positions. So let's say let's just go with the micros for smaller account sizes. So let's say you're trading multiples of 2 micros. That would be a key area I'd be looking to ratchet out of 1, get a stop to break even, and then look to ride it to a next higher level. Because the faster you can get a stop to break even, especially with these kind of potential reverse moves, and then hold something for the potential move. Remember, we have the clear path on the 4 hour. So what do? If you're trading the bigger time frame, you go to the 1 hour and watch for stopping points. So there's a stopping point right around this 41.83. There's a stopping point around 42.08. So that's how you fine-tune the clear path moves with areas. Now, shorter term, we're going to look at this. We're trading right at the 62.5. So if we start breaking down below this level, going into the open, what do you think I'm targeting? I'm targeting a retest of the lows, the 87 to 100. Even if we come back down to 75, it would be a sloppy double bottom with this hitch in there, but it could be traded. So I'd recommend putting on the conservative targets, and it is reversing this move. But it'd have to trade down to the 75 level, which is 41.2775. So if you trade down there, you do have a potential double bottom. I think all the longer-term viewers know how to do a reversal pattern on that. And if it breaks below that, then I'm watching for this bottoming to hold with a little potential flush out move to get a rally on. If we really start selling off with momentum, then I'm going back to that 40.97 to 4100. So that's the exact way I'm looking at the open this morning. And I'm starting to lean with this multi-day pullback to now the bounce trade going into Jackson Hole and then setting up for a bigger reversal pattern. All right. NASDAQ, I'm not going to go through the detailed analysis on this one. You got the clear path. The key area I'm watching for the bullish is about 12,952. And your major support, we're trading right around this pretty significant support you see back from the beginning of August. We start breaking down below 12,824. I'm watching for that 37.5 harmonic with the 200 on the 400 as a stopping point, and then we have more significant clear path move though. So keep that in mind. If you do especially get at least a 1 hour close into that, you do have a clear path move back lower. And the major, if we continue a major move downward, 12,580, not expecting it, but preparing for both sides of the market. Your stopping points to the upside, I'm still keying off of 13K. You have this hitch here. This is going from the 4 hour to the 1 hour. Next little hitch area is 055 to about 13,072 target area, and then it would be a run up to about 13,173. Now this, if this pulls back also really quick, the level would be 12,859 is the area it has to pull back to at least get a potential double bottom with using those targets. Dow, again, I'm not a clear path move. My stopping points 33,311, 33,576. The upside we completed, by the way, the wedge pattern you see fully completed, holding so far at the bottom of the daily rotation zone. So that wedge pattern is all done. So both the wedges in the S&P and Dow hit. Next key major support area 32,851, and then you have a number of stopping points just below that. So not much else I need to cover. The Dow cycles at the bottom, nearly in oversold condition. Russell trying to also pause here at the key support. You have this resistance area back from the end of June. You have support area from the 10th of August with the CPI takeoff. With the key close yesterday, now trying to dip below that and hold that. If we do dip below yesterday's low, the next major support area isn't back down until about 1890. Resistance areas. We start breaking, I'm going to bump this level up just a hair. We start breaking above about 1925. You got about 1940 and then 1951 to the upside. DAX also trying to put in some kind of reversal pattern. We'll also keep an eye on this for a potential double. The pullback level on the double, just let me get through these things real quick, then we'll take a look at some other stuff, would be 13,162. I know we have some DAX traders in there. And then it would be a trade back above it, but the DAX actually, it doesn't have as big a rotation in there, and that's going also into a clear path move. And I'd mind this gap, and that's just not necessary for today. Okay, notes. Again, looks like we're trying to break below this 17, 18 level. My next major area is 1705. To the upside, nothing going on yet unless we can get, we'd have to get back above that 50% level at 118.05. So it's sitting on hands with that. Crude, I was going to say, watching for the break back above there. We've already done that. Now I'm watching for, if we do get a minor pullback, a little pullback to the highs on the 19th, if they hold the rotation back up through the, through about this 92.40 area, targets are 94.23 and 95.22. We are getting to the top, but not a confirmed rollover, not yet overbought. So we could easily still tackle these highs back from the 11th and the 200 to kiss that goodbye again. So that's the only upside play. Key major support is 90.40, 90.50. Breaking down below 90.50, I'm watching for the bigger pullback again. Natural gas, watching for a pause. I put on these little reverse harmonics for the short-term levels for another shorter-term stop raise, which gave 10.03, which we bounced off. With this kind of bar, we start breaking towards below yesterday's key close, and so far today's low. I'm watching for a return to this shelf about 937 with the rising daily rotation zone. So that's what I'm keying off of. Would not be surprised with overbought conditions to see that pull back first. Dollar index, getting the pause back from the highs of the 14th. Watching for a consolidation and also a slight bounce in the euro. Minor pullbacks levels are 108.62 and majors about 108.03. VIX, we'll be watching off today's low so far. In case if we start breaking that, I'll go into more of a minor bullish and start watching if those doubles form for that reversal pattern. Unless we get a move back above about 24.70, not getting into super bearish mode again. By the way, you can put your harmonics just on yesterday's bar and watch the 50 to 62.5 area. If it does drop, that's where my first key area is for a more bullish reversal area. Bitcoin, still this double on the dailies in play. It's now more of a horizontal channel on the 4 hour, and these targets would be brought in. But it's really, I just watched the trade back in here. If we do break above at this point, If we do break above, especially close above about 21,525, then I'm 21,795, and then we're into a clear path move. But this would just be a bounce move with a NASDAQ recovery, although the correlation is dropping pretty rapidly with that. I wanted to touch on the euro real quick. Euro got the bounce off that 99 area in the harmonic, so watching for a little bounce play and then a rollover play. The key levels right now, again, this would be a bounce and a rollover because you have major support recovering resistance. 99.60, and then right above that, you have that rotation. Then you're going into clear path, so we could retest that parity mark on a little stronger rally. Tesla, little up this morning. Keep in mind we have gaps to the upside. We've so far held the daily rotation zone. I'm watching for the gap trades as long as the NASDAQ and the S&P firm up into the open. The key targets that I'm utilizing are both the gaps 890. So that would be the first play up there. And if we got some really weird rip your face off rally in this, the next target would be 900, then 908 to the upside. Again, if we start breaking below yesterday's low, going to be targeting 851 and 838. I know we wanted Zoom. I mean, Zoom, you're essentially your support is this 8750 harmonic with this key close back from 18th of May. So that's roughly coming in about 8470 area. You break below that, it'd be the lows. I mean, I'd focus then on this key gap open from the 12th, which would be 8113, and then the lows. Now, I'm more interested if this does firm up. You'll still have the dip buyer step into this, so I would be watching for a partial gap fill play. And besides using really short-term opening price data, I would be focusing on 90.34, that prior 75% harmonic as a key level to utilize. Where else do we sit? There's your Zoom, Lauren. I was going to say something, but you took care of it, Sterling. So let me look at the Qs. The Qs trading 313.91 was our close yesterday. I'd be watching the first little move on a move up would be the gap fill 314.36. Nothing much has changed because the flat 200, this key open from the 29th of July. So if we do sell off, it's 311 area is your key support. And then if it breaks below that, the target would be 309. Again, because I'm watching for that bounce in the NASDAQ, watching for a bounce in this. So besides that quick little gap fill, what would we then use for the targets above that? My next target beyond the gap fill would be 316.50, and then the gap open from the 22nd. The gap open from the 22nd is 318.44. And then not just for today, but on a continued rally, you've got to watch this 4-hour rotation zone rolling over, but you do have the gap filled magnet and a return. Remember, this prior gap was filled with this gap, but now you have a double gap magnet. Spiders, 409.75, 411.71 to the upside, trading 413, just above this little yesterday's low and the 50. So that's even on a little pullback, this 412.60 area and yesterday's low 412.40 is going to be key, but I'll be focused on an upside. The return areas I'll be watching are roughly 415 and then the open of 417.05, and then longer term would be the gap fill. But the rotation zone is right in front of that, so we'd have to use our gap harmonics. I don't think TomTom's ever a bear. I mean, this market could go to this would take out the most recent swing lows, and TomTom would still be saying buy the dip. So I'm not seeing anything else that I need to cover. Let's just take a look back at this little thing on the pop. Let me fine tune this. And again, not a flag pattern, but for the bullish thing, there's going to be 41.42 is going to be your S&P resistance going into the open. And then if you want to try, since this is technically not a flag, we can use, though, a really nice trend line here. So you start getting above this trend line. You do have some minor stopping points, so it's going to be a little tough, nimble trading into that area. But above 41.42, I'd be keying off that trend line. You can even fine-tune it with that 1 hour chart. I'd be keying off that trend line. If we do get that bounce, and remember to the downside, if we do dip, that's not necessarily a bad thing because we could be forming a stronger reversal pattern that will attract more people. So unless we break yesterday's lows with momentum, I've got to be really watching for this bottoming area. He's acknowledged dips. So is that in TomTom's favor? TomTom's acknowledging dips? Well, you got to buy something. That's not necessarily bullish to me. If I waited 80 years for a trade, then that means I'm overly fixated on that trade. So, we'll bounce before 80 years. I mean, you can't wait that. Like, if I said, guys, I'm still looking for a trade 2 years from now, that I was watching for, either my analysis is really bad or I'm overly fixated on it. And if I'm overly fixated on a trade, I haven't moved on, and that's generally not going to be a well-researched trade. So that's why, you know what? When stuff doesn't work, you move on. It's like we don't get married to stocks. Don't get married to things. They can be great trading for a while and then turn into absolute crap trading. So don't get married to it. Move on. And don't revenge trade. Yeah, we already covered that. And remember, they're going to be minor, but they can still potentially move stuff, especially if we're trying to put in a bottom. And you see here, still holding that 62.5. Really watch that 62.5 going in the open. 3 minutes. 3 minutes to the open. I'm going to wrap it up for now. I will be back after the close. Everyone have a fantastic day. What do I see in OXY? I'm watching for... I mean, the fundamentals look really good. People are going to be keying off this little triangle pattern that looks like it's breaking out. Intraday, I'm focused on the gap play. At least we've got a little consolidation with the rising. I call this a horizontal correction at this point with the rising stuff. So now I'm watching for a retest of the high areas, but first that gap play. And then the retest of the high area first. And then if you want minor levels, this is a great area. I have the major levels up there, but if you want minor levels to play with moving stops up, 73.13, 73.78. Okay, and then you look over here, and that's nearly by that key gap reversal open, and then 378 to 74, but that gives you a little front run area besides the highs because so many people will be focusing on those highs. That's how I do my little quick analysis on here. Now, what you don't want to see if you're trying to play this breakout to the upside, you really don't want to see it, especially on a closing basis, even 15-minute to 1 hour, really break down and get a close below the 68.08. Why? Then I'd start watching for the bigger pullback play to about 66 to 66.50 area. All right, now I'm wrapping it up. Bye for now.